This is the Brave New Coin Crypto Conversation, hosted by Andy Pickering.
Hi everyone, Andy Pickering here. I'm your host and welcome to the Crypto Conversation, a Brave New Coin podcast where we talk to the people building the future in the Bitcoin, blockchain and cryptocurrency space. Before we get started, I want to let you know that we have a sponsor. Yes, this episode is brought to you by Nexo, the only provider offering instant crypto credit lines, which let you use digital assets as collateral to get cash in more than 45 different fiat currencies and stablecoins. In order to secure a loan with Nexo, you must first deposit collateral that will be used as a security deposit to repay the loan if you fail to do so. The cryptocurrencies currently available to serve as collateral are Bitcoin, Ether, Ripple, Litecoin, the Nexo token, Binance Coin, Stellar, and EOS. And new collateral options are being added all the time. Nexo also offers the ability to earn 8% daily compounding interest on your digital assets, euros, US dollars, and Great British pounds. Now, this is up to 130x what the traditional banks offer. And what's more, interest is paid out daily, and you can add or withdraw funds at any time. Nexo launched in 2018, and since then, the company has established itself as the world's leading crypto lending service. So far, they have processed more than 1.5 billion for more than 550,000 users on their platform. And the company has 100 million in insurance on all custodial assets provided by the leading audited custodian BitGo. So don't worry, your assets are safe when using Nexo. Get started at nexo.io. My guest today is Diogo Monica. Diogo is the president and co-founder of Anchorage, the leading crypto custodian for institutional investors, including VC heavyweights like Andreessen Horowitz and Polychain Capital. Anchorage was selected as a founding member of the Libra Association due to its security expertise, and Anchorage completed a $40 million Series B fundraise led by Visa and Blockchain Capital. Hey, welcome to the show, Diogo.
Thank you for having me.
Interesting times. It is, as we record here where I am in New Zealand, it is the afternoon of Friday the 13th. And quite appropriately, it has been a very Black Friday here and, well, really around the world. Global markets have absolutely tanked due to the fact that finally the world has woken up, I think, to the threat brought on by the COVID-19 coronavirus. And look, we're really seeing that play out in real time today, aren't we?
That's right. It's been absolute chaos in crypto and everywhere else.
Yes, indeed. And look, I'm not going to dwell too much on this today, but you know, what does this mean from your perspective? Have you had Anchorage clients on the hotline?
No, actually. So Anchorage has seen very little of this outside of obviously the price movement. We are usually pretty insulated from the price movements. I would say that if you look at our business as an institutional custodian, we really are, infrastructure platform for all these institutions to participate in crypto. And so it doesn't really matter what happened to prices. People might buy in, move, buy, sell, but overall, we haven't seen dramatic changes in the behavior of the institutions that are our clients.
Well, that is very interesting. And look, I'm sure we'll talk more about that as we go. So why don't we kick off with some background then, because even by crypto standards, you have quite a fascinating background. So you've got a PhD in computer science, you're a distributed systems guy, you're a security threat model guy, and you spent some time at Square as an early employee there as the platform security lead. Pick up the story. So you must have enjoyed watching the continued success and rise of Square and the Cash App.
Absolutely. It was a fantastic company to work at. And it's been really fun to see their foray into crypto and kind of like my path and Square's path kind of converging in the world of Bitcoin. And that company, I'm still an investor. I've been following it from the outside for a long time.
Yes, indeed. And of course, it's been interesting to watch Jack Dorsey fly the flag in quite an uncompromising way in terms of his support for Bitcoin. He's been increasingly vocal about that, hasn't he?
Absolutely. And I think the hiring of a team that gets paid by Square but reports to Bitcoin I think is a fantastic move, and it's amazing for the community. And I think more corporates should emulate that model.
What was your personal introduction to blockchain and Bitcoin, and when did you first start to fall down the rabbit hole?
Yeah, I think my path is pretty interesting, and it's kind of similar to the path of the company itself in Anchorage. And the high level view there is that about 10 years ago, I joined Square, as you know, as an early stage employee. And that's where I actually met my now co-founder, Nathan McCauley. And it's kind of like the beginning of the path of Anchorage. But before I joined Square, I was working on something that was not particularly useful, if I may say so myself, 14 years ago, which was a PhD in distributed systems. So in 2007 and 2008, I was publishing papers that used Hashcash as a computational resource test, and was publishing academic papers in Byzantine fault tolerance and distributed randomness. And, lo and behold, 14, 15 years later, there's some utility for academic expertise like that. And I was not only lucky in that, but also lucky to be so early at a payments company that is defined a whole niche here in the United States and be exposed to world-class security expertise and building something that I'm really, really proud of at Square. And then move to another company that was space-defining, which was Docker, that really defined the containerization space and created all of this new space in which, over half of the cloud providers on the internet now run my code in the form of Docker containers. And so both Nathan and myself added a lot to the security team over there. And then Anchorage comes really out of need when in 2017, all these crypto funds started reaching out to us for help with custody of these private keys that were incredibly hard to generate and safekeep. And that's where we saw a business for Anchorage. And so it is unique, my background, in the sense that, every single step was, in a way, a step towards Anchorage. And it's kind of like the perfect unique Venn diagram of our skill sets is private keys that are worth $100 million.
Yes, indeed. So, let's start to talk about custody then, because that is what Anchorage does. And custody, of course, is one of the key narratives in crypto, right? And for a long time, of course, cliche to say now, but, the idea was that one of the things holding institutions back from entering crypto and in a major way was a lack of institutional grade custody solutions. Of course, things are a little bit more nuanced than that. And I think it was never just about custody. That's just one piece of the puzzle, right? So it's about custody, it's about risk, it's about education, regulations. All those different pieces are all tied together. But that said, custody is certainly a major part of that equation. So what is the current landscape of institutional grade custody solutions in 2020? Where are we at now? Because I think the pieces of the puzzle are there, right?
Yes, the pieces of the puzzle are there. In which format is a pretty large question, though. The reality is that a lot of what's here is what the market really has seen for the past 10 years, which is institutional solutions that are primarily based on this cold storage narrative. And you're obviously familiar with cold storage, which is this principle in which people store keys or shards of keys, and by and large, they store them in safety deposit boxes or offline vaults. And then whenever a key needs to be used, there's a human-based process that is required to be followed for the key to be assembled and then used. But the interesting thing there that was always interesting for me, and it's still true today, and one of the ways that Anchorage is very meaningfully differentiated, is the fact that if you look at cold storage, and what cold storage actually is the same exact technology that the pirates used in the 1700s to store their gold coins. It was gold coins in treasure chests. It was treasure chests buried in islands, and then treasure maps to really tell you where you stored your treasure chest. And so the reality is that is not sufficient for institutions, and I think we've seen a lot of that. We've seen a lot of institutions start out by having a cold storage solution and then realize that the crypto world that is moving towards proof of stake assets, that is moving towards governance, that is moving towards DeFi, is not really a world in which cold storage serves them well from an institutional perspective. And so even though the specific key generation mechanisms in storage have been in the market for a couple of years, there's very few of these custodians that can actually serve the needs of institutions. And that's where we feel like Anchorage is very differentiated.
Yeah, and look, I love the pirate metaphor, and I know you've used that a couple of times, and you do have a habit of talking about pirates, right? Because you also wrote an essay, I think, about the difference between tactics and strategy, and that was pirate based as well. But you raise a couple of good points there, and you talk about. So to, again, go back to the pirate analogy and the treasure map, right, which is pointing to all these different locations. So is that kind of similar to, two of the most famous, I guess, old school cold storage solutions? One is, that the Bitcoin vault in the Swiss mountains, but for the Zappo solution. And then, the Winklevi twins from Gemini. I think when they first got into Bitcoin, and they bought a whole lot of Bitcoin in the early days, and then they distributed these private keys all around, different bank safety deposit boxes all over the country, right? So what you're doing now is sort of quite a significant move on from those days, right?
That's right. I think the instinct there is that in a world where Bitcoin was primarily a retail-driven phenomenon, cold storage was sufficient and enough. But in a world where you have dozens of different cryptocurrencies and where these cryptocurrencies require active participation and institutions are the primary holders of these cryptocurrencies, then it's no longer sufficient.
Exactly right. And so, well, let's just talk about what that means then. So, yeah, as you say, at one point, maybe people would just hold Bitcoin, and so they didn't necessarily need to have instant access to it. But now with proof of stake assets, and, there's the opportunity to participate in staking and governance. And of course, also, I suppose, a lot of these institutions, they want to be able to pounce, shall we say, on whatever market opportunities they might see. And, today is a good example of that, I suppose. So really it's about being able to have the benefit of both, right? So they know they've got their assets very well secured, but they are able to access and move those assets in a short time frame. Is that correct?
That's right. With Anchorage, the time that it takes for a client to move assets and go through better than cold storage verification that they are the individuals that we think they are, that their devices are not compromised, and that the pattern of behavior that they're actually showing is the right pattern of behavior until the transaction is approved for Anchorage. That is minutes, is measured in the minutes. I think 99 percentile of our transactions is under an hour. So it's very fast for institutions to have security that is actually better than the cold storage process that they had when they were doing self-custody, or that they have when they're using other custodians. So that's kind of like a unique view over it, is that you're not really compromising safety for speed of access. What you're effectively having is something that is safer and is faster.
And can you talk us through what that process looks like? I imagine some of it is your secret sauce, and you probably don't want to get into too much detail, but from what I can understand, you're using different types of biometric signals. There's talk of behavioral analytics down to individual people and individual devices. And at the same time, this is spread around multiple users or, across a team inside any one given client. So, yeah, is that accurate? Can you try and explain what that looks like or what that means?
Yeah, absolutely. The instinct there is that a lot of the focus on custody, when we talk about custody, is on key generation and safekeeping. So the act of actually correctly generating a private key and then ensuring that no one can access that private key. So no one that shouldn't access the private key has access to it. But that misses 75% of the picture. So the last 25% of the picture are key generation and safekeeping, but it ignores the fact that you have to do a lot more than just key generation and secure use. You have to identify first and foremost who are the humans that are instated in a specific policy for this organization as authorized to do a transaction. Then you have to ensure that the devices that they're using are not compromised. And then you have to ensure that the behavior of the organization is actually matching a pattern and that they're not sending to an address that they believe to be correct, but it is incorrect. So you're, protecting them from shooting themselves in the foot. And so that's where people miss that custody is a lot more than just safekeeping and safe key generation. It really is a whole process that goes from identifying the humans behind the devices, monitoring the safety of the devices, looking at behavior and analytics of their behavior, where they're sending transactions, and validating and having a safety net for all of their operations. And then finally, the actual interaction with the private keys themselves.
Can you give us some more examples of what that would look like in terms of, or what the assets are that most require this nimble access, I suppose? So, if we're talking about staking, airdrops, or active participation mechanisms, governance, trading, talk through some specific examples of any particular assets that would be most applicable there.
Yeah, absolutely. It's really about the use case and less the asset. But assets that do have proof of stake, things like Cosmos, there are assets in which you need to have the keys, delegated keys, or keys to actually do proof of stake in an online fashion. And those keys being compromised actually can cause loss of funds for the clients. And so you need a fundamentally different technology than cold storage to be able to successfully do staking in these networks. And there's other assets like Tezos that also require staking, and that some custodians have to do a lot of changes to their architecture and contortionism, so to speak, to actually support these kinds of assets in a safe manner. But it is not just proof of stake assets that require this kind of technology. Even if we are just talking about Bitcoin, the moment you have a fund that wishes to have fast access to their Bitcoin, then this kind of technology is necessary, because you should not depend on humans going to safety deposit boxes and messing around with QR codes as the way to actually transact from your custodian. Humans have a lot of issues. Humans are known to make mistakes and to be bad at following checklists. And also humans are slow. Why would you be depending your business on how fast a human can walk to an actual safety deposit box at a bank? That makes no sense. So it's not just assets that require you to do active use of the private keys, Tezos, Cosmos, and even governance assets like Maker and other assets like that. But it's also any kind of interaction through an API or interaction that requires any fast access and any fast movement of the funds from custody. The reality is that there's still a lot of reasons as to why assets have to move fast. Market makers want to send assets very fast to different exchanges. Clients that are using OTC counterparties actually have to settle very fast with their counterparties. And so a lot of the market still has this need to move assets, even though there's obviously a lot of efforts, including from Anchorage. Anchorage is not just a custodian. We also have Anchorage Trading that allows our clients to trade from the safety of custody. That does not require you to move your assets at all. But in general, a lot of operations require you to move your assets or require you to use those private keys, and all of those benefit from architecture.
And so I think obviously the Anchorage solution is right on the cutting edge of providing those custodial solutions for institutional clients. But when do these kind of, I suppose you'd say, fail-safe solutions, so you alluded to this before, so what I'm saying is when are these solutions going to be available for retail? Because there's still this, it's still easy for something to go wrong, right? It's easy for someone to lose their private key or lose the ability to access a seed phrase. When do these kind of problems get solved?
Yeah, that is an excellent question. I think the way that I can answer that is that our focus is on institutions. So Anchorage is serving exclusively institutions. And the reason why we believe we're also helping with the retail problem is because until institutions have safe infrastructure and safe counterparties that provide them the ability of doing custody, trading, active participation in a safe manner, only then can these institutions actually serve retail in a protected and safe way. So I think there's innovation needed, not just on the consumer wallet side, but also on companies like Anchorage providing these infrastructure solutions for people to feel safe to actually build business.
Yes, because it's all very well for people to say, not your keys, not your coins, but not everyone likes to admit it. But I think for the vast majority of normal everyday people who are trying to get into crypto, a lot of the time they are actually safer in some respects holding their coins on an exchange, even though that is not safe. But it's not safe necessarily for them to, be fiddling around with some of the dodgier wallets out there either, in my view.
Yeah, absolutely. And look, I do think that we need to invest effort as a community in ensuring that people have an easier time doing key management. That is absolutely true. However, the way that I see this, not your keys, not your Bitcoin, is that we should keep that as something that is available for people to choose. People should always have the ability of keeping their own keys and storing their own wealth and having that be, protected by their own mechanisms and by their own devices. But the reality is that a large percentage of people will choose to have maybe the majority of their amounts of savings, or they decide to delegate all of this to a third party. And that will also be something that will happen, because that's just how, companies specialize. Companies will specialize in doing a way better job than actual consumers and retail will ever be able to do. And so there will be a focus on this. There should be a focus on the individual side of things, but there should also be a focus on institutions that can safely keep these assets. I think it's investment in both sides.
Completely agree. I want to talk briefly about the threat matrix. I'd love to hear a little bit more about your background from, I guess, the threat matrix modeling side of things, and then how you see the threat matrix changing over time, right? Because it feels like, it's always a yin and yang escalating battle between, say, white hats and black hats, right? And I think a really good example of this is we've seen this play out in DeFi over, the last month or so. It sort of feels like there's this, $1 billion worth of assets or whatever locked up in DeFi as effectively just a giant honeypot, and the black hats have started to try and chip away at that. And so, I'd love to hear your background as a threat guy, and comments on how the threat matrix has changed and where that's at today.
Yeah, I think threat modeling is obviously one of the core skill sets of any security engineer worth their salt. And so every company really, to a certain extent or another, does threat modeling. I think the unique thing about Anchorage and about the crypto space is that, our threat model really is embargo nation states. It is one of the few threat models that actually should consider nation states as a potential adversary. And the reason why that's interesting is because it completely changes the kinds of decisions that you make. So in the sense that the goal of threat modeling is to come up with, the objectives, the vulnerabilities, and making sure you're designing countermeasures to prevent or mitigate these threats. In that sense, your threats is a potential nation state that wants to fund and bankroll their operations by stealing crypto. And so there's very different decisions that are being made at a company like Anchorage that has this kind of attacker model than any kind of other company that just plays in the normal space.
So when you say nation state, give me an example of what you mean. Are you talking about, say, like a rogue nation, like a North Korea sponsoring an army of hackers or something like that?
That's absolutely right. And in fact, we've already seen evidence that North Korea is funding some of their operations by attacking not only crypto, but also, the Swift network, banks. They will do whatever is most profitable at that particular moment in time. But that also means that we'll go after crypto exchanges primarily because they're usually the ones that have the weaker security. And then at some point, they will go after all of the rest of the infrastructure, liquidity providers, custodians, so on and so forth.
And even so, I suppose from your perspective, I bet you're relieved that the attack surfaces on Anchorage are probably significantly lower than in DeFi at the moment.
Yes, absolutely. There is, fortunately or unfortunately, a lot lower hanging fruit in crypto. And the large majority of the exchanges are usually the lower hanging fruit.
Do you ever lose sleep over this stuff? Like, how do you sleep at night?
I think if you do the job that we've done at designing an architecture that is really made for solving for this attacker model, then you have confidence on your systems. And there's no single point of failure at Anchorage. There's no single point of failure on the client side, in the sense that no single individual can move transactions in a unilateral way. So can approve transactions in a unilateral way. So move Bitcoin out of the system without following a policy of a quorum of 2 out of 3, 3 out of 5, completely configurable. But also on the Anchorage side, there is no single engineer, including myself, that has the authority to unilaterally move client funds. No, not even 2 engineers that have that ability to do so. And so you design these systems in a way that they protect against even you trying to steal your own client's funds. And so in this case, the threat model would be, an evil twin attack, in which a twin of myself comes into the company tomorrow and tries to wreak havoc. How do we protect against that? One of the founders of the company to try to move assets outside of the platform. And that's what we solve for. And so once you're solving for that kind of attacker model, you have so many redundant systems and so many systems and controls in place to actually protect the assets of our clients, then you can sleep soundly at night. But with the obvious expectation that you're constantly reinvesting in security, and that security is not really a place that you get to. It's a process that you're constantly reinvesting in. You're constantly taking more data points and improving upon.
Yes, indeed. And I love that term, the evil twin attack. I can just imagine one of the Winklevi twins, Tyler or Cameron. Which one do you think would go rogue and become the Terminator, the evil twin?
That is an interesting idea.
Indeed. All right, well, let's go to a very quick break, and then when we come back, I want to touch base on what the Glacier Protocol is. You're a member of the Libra Association, and let's just touch base on your fundraise as well. We'll be back in 30 seconds.
Whether you're an enterprise fund manager or a retail trader, buying and selling cryptocurrencies successfully requires price discovery you can rely on. Brave New Coin's liquid indices provide trusted US dollar prices for Bitcoin, Ethereum, and Ripple. Featuring end-of-day or intraday outputs, you can count on the BLX, ELX, and XRPLX for accurate US dollar pricing for smart contract oracles, settlement price discovery, net asset valuation, and performance analysis. Visit bravenewcoin.com to find out more.
So we're back, and I'm with Diogo Monica. He is the president and co-founder of Anchorage. You raised $40 million in a Series B round led by Visa and Blockchain Capital. So, Visa is a big name here. What's the thinking here? Because from one perspective, Visa looks like legacy finance or old school, right? So what's the thinking behind Visa investing some money into Anchorage?
Absolutely. I think one way of looking at it is if there's anyone that deeply understands infrastructure and financial infrastructure and what it takes to run, the world's largest payment network in a secure fashion, I think that there's no doubt that there would be a company like Visa. And so the fact that they've decided to invest in Anchorage after doing deep due diligence on our technology and our company, it really sends a strong validation and a strong signal to the market. So that's obviously one of the things that we wanted. And the other things that we wanted was obviously help Visa on their journey into crypto. And it's very hard, as we've described before, to do crypto custody and to do services and infrastructures for crypto, since this asset class is so unique. And so part of the goal was obviously to have deep relationships with Visa so we can help them out on their crypto journey.
Anchorage was a founding member of the Libra Association. Yeah, I'd just love to get your thoughts on where you think the Libra project is at the moment, who's still there on the Libra Association, what the members are saying, and what the likely path forward for Libra is at the moment.
It was really fun to be one of the first founding members of the Libra Association and being involved since the beginning. It's a very high-stakes project that obviously, as you know, garnered a lot of media attention and has a lot of potential impact in the world. So I think the mission is a very strong mission, and it's a mission that really resonates with us, banking the underbanked. And it's very exciting that there's a company like Facebook that, with 2.4 billion relationships, has decided to invest time and effort into bootstrapping an independent association that has as a mission to further this blockchain and this particular cryptocurrency out into the world. And so it's been fun to just, I'm also one of the members of the technical steering committee, and there's a technical board, and we make the decisions around roadmap of Libra. And working with such talented engineers and building what I believe to be the best, if not one of the best technologies out there from a perspective of distributed systems blockchain. It's been really, really, really great. In terms of participation, I think we have incredibly large companies as members of the association. And just recently, we had Shopify join us, which, as you know, is also a very large company that has shown tremendous success, as is also shown by their stock market price, which has been fantastic to see the kind of run that they had been on right before the events that we talked at the beginning of the podcast.
What about, obviously, Libra, they have attracted a lot of attention from regulators around the world who have been, I guess, if not skeptical is probably the wrong word, but they've probably felt threatened. I think that's a better word here. Do you think that is valid? And, was the Libra team surprised by the intensity of that response? And what happens next?
I think the goal of the Libra projects has always been to talk and engage with the regulators to find a path forward in creating something new that hadn't really existed before. And so in that sense, it's been fantastic to see the kind of engagement that we've had and the kinds of conversations that have been ongoing with all the regulators about how to move forward with a project like this. So I'm very optimistic that we'll be able to launch and that we'll be able to answer all of these kinds of questions that have shown up.
That's a very diplomatic answer and very, very smooth and polished. So look, I'll respect that. But it also feels like, the backdrop here is that really what could happen this decade, or probably what will happen this decade, is there's three parts to it, right? So in one part, we've got Bitcoin, which is the world's first and really only, I think, true global decentralized digital currency. Then we've got Libra, and that is, let's call Libra the potential corporate coin. And then we've got the central banks, which are suddenly jostling for position to put out their own version of a central bank digital currency. So we've got these three corners, if you like. It's a triangle. Do you have a view on that? What do you think happens? Is that an accurate description?
The way that we should look at it is they're all different attempts at creating, and I mean, they have different focuses, all of them, of course, but they're all different attempts at creating sound digital money. And sure. I think all of them are very credible. And so in a sense, I don't know that there's a competition in between them. Whatever works. That's the beauty of this Cambrian explosion of different ways and different blockchains and different crypto assets, is that we will see, the market will decide what is the best way to go forward. And so I think in that sense, this is all positive, the fact that people are interested in this. And these things actually benefit each other. And I think we've seen Libra benefit Bitcoin, and we've seen the fact that the narrative now is that the cat is out of the bag and these things will happen. It's just a question of how it will happen has been tremendously positive for the whole ecosystem in general.
That's a great way to put it. The market will decide, and competition is a good thing. We're just going to have to see what happens. I said we'd touch on the Glacier Protocol. Is that still a thing?
Yeah, the Glacier Protocol is individual protocol for cold storage. What I mean is that if your goal is to do offline cold storage of Bitcoin, and as we've described, cold storage is a really good mechanism for individuals and in retail to store their own Bitcoin, is a protocol that is incredibly paranoid, that shows you which decisions you should be making. In every single decision, it gives you the most paranoid decision that you should be making about storing your own Bitcoin. And it is a protocol that is online, that you can search for the Glacier Protocol, and that you can follow. And that's still active. It's actively looking for more maintainers. So if you're interested in being a maintainer of the Glacier Protocol, you should reach out on Twitter and we should chat.
The end user for the Glacier Protocol is an individual with a reasonable amount of Bitcoin and a very technical person, right?
That's right. It really is the paranoid version. There's a lot of cold storage out there, solutions, including of some custodians that were inspired by the Glacier Protocol. That's how paranoid it is. And by itself, it is not a good solution for institutions because it lacks a lot of features and a lot of different components that just an institutional solution needs to have, including obviously some of the things that we've talked about around the complex policies of quorums, identification of users, being able to run in a usable manner in any kind of device or a consumer device that institutions have access to, and then the ability of revoking access for certain users as the normal people join and leave companies. I think it's something that is very important that obviously is not contemplated because it's focused on individuals. Very
nicely said. All right, well, let's go to another quick break and then we'll come back and we will finish off with the Crypto Conversation Hot Take Round.
Hey there, you Crypto Conversation fans. My name is Brian Krogsgaard, and in combination with Josh Olszewicz, we record LedgerCast, a weekly podcast all about cryptocurrency trading. It's a little different than what Andy's got going on here with the Crypto Conversation podcast, where he's interviewing folks, and we think that you would enjoy it if you like this. It's also brought to you in partnership with Brave New Coin, and I hope to see you soon. Just go to ledgerstatus.com to check it out or search for it on your favorite podcast player.
All right, and we're back, and I am with Diogo Monica. He is the founder of Anchorage. So I like to finish each Crypto Conversation podcast with a quick round of Crypto Conversation hot takes. Are you up for it?
Let's do this.
I just want your hot takes, your hot fire. Take your best shot. Here we go. Where do you sit on the Bitcoin maximalist to multi-coin opportunist spectrum?
I sit more on the Bitcoin maximalist.
Very nicely said. Okay, and what would you say is your firmest conviction, crypto opinion?
I believe that Libra will launch in 2020, and that is something that a lot of people don't believe.
Wow, that is quite surprising to hear. We'll have to keep an eye on that one. Would be great to see. But keep it moving. I ask every guest this question. Bill Gates famously said, "We tend to overestimate what we can accomplish in 2 years and underestimate what we can accomplish in 10. What does the blockchain space look like in 10 years' time?
I think it's going to be a lot more commonplace than we think in terms of just normal infrastructure use. And one thing that I'm really excited to see is zero knowledge proofs to leave the academic forum and the primary use case of private cryptocurrencies, and really starting to have an impact on things like data privacy and removing the need for data collection. I think that's going to be really interesting to see in 10 years.
Fantastic. Let's zoom out. What is the long-term future for the human race? Do you see dystopia or utopia?
I think human beings have been fantastic at staying alive, and I think that will continue being the case. And I am not into escapism, so I don't actually believe the human race should be thinking about colonizing Mars.
Okay, well, Elon Musk would probably beg to differ, but that's okay.
Very much so.
This has been a lot of fun. Finally, what is your favorite science fiction book, film, show, or universe?
I think it has to be Brandon Sanderson's The Way of Kings is the first book of the series. Okay,
well, that's an interesting one. I'm not familiar with that book, but I'm sure I can put a link to it in the show notes. Hey, this has been a lot of fun. It's been informative and educational. Take us out. The microphone is yours. Tell the people where they can find you on your various platforms and where they can go to find out more about Anchorage.
So Anchorage is pretty easy. You can find us at anchorage.com, and I'm on Twitter at Diogo Monica.
Thank you very much, Diogo.
Thank you for having me, Andy.
Okay, there you go. Thank you to Diogo, and thank you to Anchorage. Thank you also to Nexo for sponsoring the Crypto Conversation. Links are in the show notes to Nexo. And look, if you want to borrow instantly in over 45 different fiat currencies via Nexo, you can do that. There's also a link in the show notes that lets you earn daily interest on your crypto assets via Nexo. Links also in the show notes to Anchorage and, of course, to the Glacier Protocol. Good luck with that one. But hey, if you are technically inclined, it could be the cold storage solution you're looking for. Now, obviously, this episode was recorded around 2 weeks ago. And now many places around the world, of course, are under some kind of lockdown. That is certainly the case here in New Zealand. We are just 1 day into a minimum 4-week lockdown to stamp down and suppress the COVID-19 coronavirus. And I think that is very simply the only and the best strategy to undertake at this time. Well, listeners, you don't need me to tell you that these are strange and uncertain times, but from me to you, please do stay home and please do stay safe. We can only get through this together. This was the Crypto Conversation for Brave New Coin. Stay